$743. Not what you owe. What you have left. You find this out at 2:17 in the morning, not because you were checking on purpose, but because your card gets declined at a gas station and the notification wakes you up. Now you are lying there in the dark, staring at the number on your phone, and there's no soft way for it to tell the truth. You are 24 years old. You have $18,400 in student loans, $2,900 sitting on a credit card you are only making minimum payments on, and a car with 140,000 miles that needs a timing belt you have been delaying for 6 weeks because $340 is not currently a real object in your life. You are not in crisis, and that is what makes this kind of broke so hard to explain. You are not homeless. You are not starving. You are still showing up to work, still answering texts, still paying what must be paid. You are just living permanently on a number that cannot absorb surprise, and life is made almost entirely of surprise. The transmission fails. A medical bill arrives. A roommate leaves with 30 days' notice. Every unexpected event hits like a reset button. Each one wipes away whatever small distance you manage to create between yourself and zero. This is what survival mode actually looks like. Not dramatic, not cinematic. Just arithmetic with no room for error. The math is always running underneath everything. Every coffee, every dinner invitation, every casual suggestion to split an Uber, you calculate before you answer. You have done this for so long and so quietly that you no longer notice it as calculation. It is just how your mind works at this altitude. At zero, money is not a resource. It is the atmosphere. You cannot think clearly about it because you are inside it. Scarcity distorts judgment the way heat distorts glass. Slowly, invisibly, until nothing sits flat anymore. Then you get a raise. Not a life-changing one. $5,200 a year before taxes, which becomes $294 extra per month after deductions. You feel it for about 11 days. Then your landlord raises rent by $150. Then your car insurance renews. Then your phone plan auto upgrades something you never authorized. And the extra charge is $22. You spend 40 minutes on hold disputing it. You win. But you never get those 40 minutes back. The $294 disappears. So you try again. You cut subscriptions. You meal prep on Sundays with the same 4 ingredients for 11 weeks. You stop going to the bar. You put $400 into savings and refuse to touch it. 7 weeks later, you have $1,100 saved. Then the car finally gives up. The timing belt takes the engine with it, and the repair estimate comes back at $1,600. You transfer the $1,100 back out, put the rest on the credit card, and start again from nothing. This is not failure. This is the current. Level 0 has a current, and it runs against you constantly. Most people never stop swimming long enough to realize they are not weak. They are just trying to move upstream without a machine. If you want the links, notes, or resources connected to this story, click below description. You pay off the credit card, not all at once, because nothing in this part of the story happens all at once. You attack it over 16 months, $180 here, $230 there, $310 when the month allows it. You skip things. You say no. You feel boring. You feel behind. You feel like everyone else is living while you're transferring money into a balance that only exists because past you had no room. Then one Thursday in February, you make the final payment. The balance turns to zero. You take a screenshot, but you do not send it to anyone. There is no one in your life who would understand exactly what that zero means. It is not just the absence of debt. It is the presence of a decision. For the first time, a financial outcome happened because you chose it. That is not small. That is where everything begins. After that, something shifts. You stop measuring money only by what it costs to survive. You start measuring it by what it might take to escape. Then comes $10,000. You are 27. You have never had this number in a personal account before. Not once. Not even close. On the day the balance clears, you check it 3 times. Not because you distrust the bank, but because you do not fully trust the version of yourself who now has this money. The psychological weight of 5 figures is completely out of proportion. $10,000 does not actually change your life. Not yet. It does not make you rich. It does not make you free. It does not protect you from everything. But it changes your category. Before, you were someone who managed money. Now, for the first time, you are someone who has some. The distinction feels enormous, even if the world would barely notice it. You do not spend it. You resist every impulse, the car upgrade, the vacation, the laptop you have been rationalizing for 9 months. You let the money sit there, and for the first time in years, you feel a faint signal underneath the noise. Not wealth, not freedom, just direction. The math is finally moving the other way. You start reading. Not shallow self-help. Not videos with thumbnails promising passive income in 7 days. You read dense books about capital, compound interest, index funds, tax structure, ownership, leverage, and incentives. You open a Roth IRA and contribute $200 a month, which feels almost ridiculous. It feels like an amount too small to matter. You will not understand for several years how wrong you are about that. The gap between $0 and $10,000 is psychological. The gap between $10,000 and $100,000 is behavioral. One is a feeling you survive. The other is a system you build. You cannot construct the second until you have crossed the first. Your income is $74,000 now. You have $52,000 spread across a brokerage account, a Roth IRA, and an emergency fund that covers 5 months of expenses. You are maxing your 401k. You are avoiding lifestyle inflation with the kind of discipline your friends occasionally joke about, which tells you it is not really a joke. You feel responsible, measured, correct. Then one evening around 11:30, you sit down and model the next 40 years. Conservative return assumptions, 7% annualized after inflation, current savings rate, projected raises, contributions, taxes, everything. The spreadsheet does not give you the answer you expected. The number at the end is fine, technically fine, mathematically fine, responsible, stable, modest, and acceptable. But it is not the thing you thought you were building toward. It describes a careful exit at 67. It does not describe the unnamed freedom you have been moving toward without fully admitting it. This is the stability trap. You have done everything correctly. You followed every instruction. You were patient, disciplined, responsible, and careful. And the reward for all of it is a ceiling you can now see from where you are standing. You are excellent at not losing. You are not yet building anything. The spreadsheet does not lie. It simply shows you the path you are actually on, not the one you imagined in your head. And once you see it, you cannot unsee it. A salary is a ceiling designed to look like a floor. The question is not whether that realization makes you uncomfortable. It will. The question is what you do next with the discomfort. So you start something on the side. At first you do not call it a business. That would sound too dramatic. It is just something you do on Saturday mornings, a service, a project, a skill someone is willing to pay for. It makes $500 a month, then $1,100, then $2,300. You keep it quiet. You do not upgrade anything. You do not celebrate. Every dollar it generates goes back into the mechanism for 15 months. You eat the same meals. You drive the same car. You say no to 2 vacations, a group trip to Portugal and a bachelor party in Austin that would have cost you $850 all in. Your net worth crosses $100,000, then $130,000. The gap between where you are and where the salary alone would have taken you begins to widen. You can feel it, not only in the numbers, but in your perception of time. Hours begin to look different. An hour spent on something that does not compound starts to feel like friction, not morally, strategically. You are beginning to think like a machine operator. Your investments return $5,800 in a single calendar year without you making one active decision. You read that sentence again. $5,800. While you were at work. While you were asleep. While you were doing something else entirely. This is the first time you understand what an asset is, not as a word from a book, but as a physical sensation. An asset is a mechanism. Something that generates output independent of your direct presence. You want more mechanisms. You stop asking only how much you can earn. You start asking how many things can earn on your behalf. If you want the full resources, examples, or related tools, click below description. You buy a duplex. You are 34. You put $58,000 down and rent both units. After mortgage, taxes, insurance, and a conservative maintenance reserve, the property nets $720 a month. $720 is not Dynasty money, but it is proof of concept. Something you own is producing income while you think about something else. That changes how you understand work more than any raise ever did. Not because of the amount, but because of the category shift. You now understand assets from the inside. You understand leverage not as a financial term, but as a force you are operating. You understand why people who escape the wage structure usually do it through equity, business, or property. Not because it is a secret, but because ownership is the only thing that makes sacrifice feel like a trade instead of a toll. Your net worth is $200,000 to $30,000. You are 35. You have a rental property, a brokerage account at $91,000, and a business generating $4,100 a month. You still drive the same car. People in your life make assumptions about your situation that are wrong in both directions. You do not correct them. You have learned that money at this level makes people strange. Some become reverent in a way that creates distance. Others become dismissive in a way that hides envy. Neither reaction is useful. So, you say less, and you build more. Below $250,000, you are accumulating. Above it, you are allocating. The strategies are not interchangeable. A lot of people get stuck because they keep behaving like accumulators long after allocation would have compounded everything faster. Then comes $1 million. You are 39. It happens on a Tuesday without ceremony. Your brokerage app refreshes while you are in a meeting about something that stopped mattering to you 6 months earlier. The number is 7 figures. You look at it for a moment and wait for the feeling everyone implied would arrive. Something does come, a small private recognition. A quiet confirmation that the direction was right. Then, almost immediately, a colder realization replaces it. $1 million at a 4% withdrawal rate is $40,000 a year. That is not total freedom. That is a starting point. The identity crisis at the $1 million mark is not that you feel empty. It is that you realize you were never chasing the number itself. You were chasing the thing the number was supposed to confirm about you. Now the number exists, and all it confirms is that you can reach a number. You thought you would feel arrived. Instead, you feel recalibrated. Crossing the milestone does not make the distance vanish. It changes the scale. The milestone was never the destination. It was proof of concept. The real question begins on the other side of the number everyone told you to chase. You stop attending certain rooms, the startup networking events, the finance panels, the happy hours where people talk endlessly about what they are building, but never about what it is costing them. You do not hate those rooms. They were useful at a different altitude. But you are building inside a different conversation now. A quieter one, smaller rooms, fewer people, no lanyards. Sometimes if you're paying attention, you meet people who make your $1 million feel less like an arrival and more like an opening bid. At $3.4 million, money stops producing anxiety and becomes a resource, like time, like attention. You do not think about your checking balance anymore. You think about allocation. Where is the capital positioned? What is the return profile? What risk are you underestimating? What are you not seeing? You hire a wealth manager, realize within 4 months that he is optimizing for his book more than yours, and replace him with someone better, someone who charges more, talks less, and has clients you have heard of. You restructure the business. You bring on a partner who adds capacity you could not hire fast enough to build. You exit one position at a $195,000 profit and roll it into something with a longer time horizon and a different risk profile. You are no longer making decisions reactively. You are positioning. The texture of the work has changed entirely. At $1 million, you are still learning what money is. At $3 million, you begin understanding what money does. The difference is not only the number. It is the quality of attention you bring to each decision. Your business does $5.8 million in revenue. You own 3 properties with combined equity approaching $800,000. Your portfolio sits at $2.1 million. You take a 2.5-week trip and do not check your email for 7 days, not because you forced yourself, not because you used discipline, but because the machine ran without you, and nothing broke. The machine was always for this, not the trip, the 7 days. You cannot buy those days at lower levels. Time wealth is the only wealth that cannot be manufactured on demand. Either the systems hold when you are absent, or they do not. Yours hold. At some point, you stop thinking about what you can earn and begin thinking about where you want to be standing when the next cycle turns. You are no longer sprinting. You are navigating. At $8 million, you start meeting people at $35 million and $70 million. You study them the way you once studied the $10,000 mark from zero. Not what they own, how they think. Their pace is different. Their patience is longer. They are not trying to win every hand. They are trying to remain at the table when everyone else has either cashed out too early or lost their footing. They speak in cycles, not quarters. They describe positioning, not performance. They do not seem anxious. They seem oriented. And that orientation looks effortless only because it was forged over decades you have not yet lived. You take notes on things they do not realize they are teaching you. At $15 million, you find yourself in a room you once only read about in passing. Not a famous room, not a televised one. A private room where a family office managing $700 million is evaluating a co-investment alongside you. They are not doing you a favor. They want your deal flow, your pattern recognition, your operational history. You are at the table because your capital and judgment are genuinely useful to the people already there. That is a different species of power than anything money bought before. Not status, utility. Utility at scale. At $10 million, your reputation becomes a financial instrument. It earns returns independent of your direct effort. Every room you enter either appreciates it or depreciates it. You choose the rooms accordingly, with increasing precision. You make a decision at $17 million that would have taken you weeks to process when you had $400,000. A company in your portfolio restructures its workforce. 71 people. You know the CEO. You have had dinner with him. You know his children's names. You do not call him. You review the operational rationale, conclude the restructuring improves the margin profile, and hold your position. The company's value improves 24% over the next 2 quarters. You do not feel good about it, but you do not feel bad for long. What you feel is distance, the growing quiet gap between your decisions and their human weight. The gap itself does not alarm you. The fact that it does not alarm you is what briefly alarms you. In moments you do not linger inside. Your net worth crosses $32 million. You are 51. You establish a trust. You establish a foundation that costs $700,000 a year to operate, and you understand without pretending otherwise that it functions partly as access. Doors open because of what you represent and what you can fund. You have stopped pretending about most things. Pretending costs energy, and energy is the only resource in your life that does not compound. The machine no longer requires your full presence. It requires your positioning. Your job is not to run the engine anymore. Your job is to point it accurately and leave it alone. At $55 million, you think in cycles, not fiscal years, not decades, demographic cycles, credit cycles, infrastructure cycles, the long arcs of technological displacement. You position ahead of them, the way a navigator reads weather 3 days before it arrives. You are sometimes wrong. Being wrong at this level means a position underperforms by 200 basis points and you rebalance. It does not mean your life changes. That sentence would not have made sense at 24. Now it makes immediate sense, and the distance between those two versions of yourself is not measured in dollars. It never was. You own equity in 13 companies. You have relationships with people who shape policy, not politicians. That distinction matters to you because language still matters. You advise. You do not lobby. You contribute $4 million to causes that genuinely matter to you. Some of it is not tax advantaged, and you do it anyway. At this altitude, giving is one of the few decisions that still registers as a choice instead of an inevitability. You protect that feeling. At $85 million, the isolation is not exactly loneliness. It is something more specific. It is the condition of having a context that does not translate. The people who knew you when you had $743 in checking are not gone from your life, but you now live in a different country, and the customs do not export cleanly. Your daily concerns, fund structure, dynasty trusts, regulatory positioning, carve-outs, secondaries, multi-generational transfer of frameworks instead of assets, do not fit inside most dinner conversations. You are not a different person. You are a person whose coordinates have moved beyond the range of most maps. Above $50 million, money stops measuring your worth and starts measuring your reach. The number no longer describes you. It describes what moves in your direction and how far. You are 63. Your net worth is $93 million, and the exact number is known to 5 people on Earth. You have not worked a conventional day in 12 years. You have not stopped working. You think in structures now. Legal structures. Capital structures. Time structures that extend past your death. Documents that will activate when you are gone. Frameworks that will govern decisions made by people not yet born. You are no longer building for retirement. You are building for continuation. This is what generational wealth means at its outer edge. Not a large account left to children. A system that operates across time without requiring your physical presence. A machine that runs because of what you built, not because of what you do. There is a board meeting. 6 people. Combined capital in the room is enough to reshape the economic trajectory of a mid-sized country. You speak for 7 minutes. You ask 2 questions. The room recalibrates around them. You leave before lunch. No one in the room references how it started. No one in the room knows. And somewhere right now, in a city you have passed through, but not recently, a 24-year-old is standing at a grocery store checkout buying store-brand coffee. She is doing the math she has always done. She already knows the math. It runs beneath the ride home, beneath the restless sleep, beneath the morning that begins with a phone screen, and a number that does not change no matter how many times she checks it. $743. She thinks this is a story about money. She thinks if she earns more of it, something will finally resolve. She does not know yet what has to resolve. She does not know what the machine will ask of her. Not in dollars, in distance. In the long, quiet, irreversible gap that opens between who you are at the beginning and who you have to become to reach a different end. It will not announce itself. It will not ask permission. It will happen one decision at a time, one level at a time, one version of yourself at a time, until the person at the end of the journey shares a name with the person who started it, and very little else. The machine does not ask if you are ready. It does not negotiate the terms. It opens every morning and takes whoever shows up. Whoever shows up consistently, patiently, without flinching, without stopping to ask the question everyone else keeps asking. They compound. The capital compounds. The decisions compound. The distance compounds. And everything else you carry compounds silently alongside it. The balance is $743. It always starts near there. It always will. And if you want the resources, links, or tools connected to this story, click below, description.